Welcome back, everybody. Sive Morten is here with the ForexPeaceArmy.com. Let's take a look again on the euro currency. In this report, we're taking a look at a couple of moments. First is just briefly tell you about our new fundamental report that we have prepared today. And second, we'll take a look, as usual, on the technical picture and a short-term perspective and trying to create at least the trading plan for next week. So speaking about our report, just briefly, of course, it has passed under the sign of the Jerome Powell meeting, but currently we're not as interested with the things that he said, but mostly with its impact on the performance on the euro currency in relation to the dollar, of course. Why? Because recent Powell statement is, significantly changed the balance between the rates expectations in the European Union and in the United States. And that's what we were considering. Besides, we have taken a look at some maybe not obvious factors that could come in play closer to the end of the year or in the first quarter of 2026 that could drastically change the balance of the interest rates. And Fed could not have some time to make a maneuver with the rate change. I'm speaking about possible tariffs impact. So all this taken together with some analysis of the other factors makes us think that currently we do not see really important drivers, some really obvious factors that could suggest break of the long-term bullish tendency on the euro currency. At the same time, as you could see right now, I will show you in this video that it doesn't exclude the situation where euro could show a significant pullback. Now we'll start talking about the technical picture, right? So it's enough to take a look even on the weekly chart to understand what's going on. So here's what we have. First of all, mostly completion of the free drive, because take a look, market stands precisely between the two extensions of the second and first drive. And it's mostly, I would say, that free drive is done. The target of the bullish dynamic pressure is also completed. It's because market creates the new top. But it's more interesting what has happened next. So here first we have bearish reversal pattern, right? Second, we have a classical shooting star pattern of the big scale, which is actually also the wash and rinse of the previous stops. So market just grabbed stops above this area and collapsed down. And third moment, I'm not even speaking about the nominal trend, right? So it's bearish. And so third moment, let's take a look. Market has returned down in this long-ranged wick, right? That held market almost for 2 months. It means that market was not able totally to break out of this range. So temporarily it has happened, but now it returns back. All this stuff looks bearish. But this is weekly time frame. So, and here how we will combine this bearish background with the things that we see on the daily chart. On the daily chart, we have bullish context because we have bullish trend nominally. Market is coming to very strong support area. So mostly we talked about this on Friday, but just remind you what's going on. So we come into the conference support 1705, 1716. And here's some kind of the trend line, right? Also take a look, market is flirting with the May City, and it could happen that on a Monday we could get the bullish grabber around conference support area. That will be great background for taking long position. Of course, we are not counting on the upward breakout and taking out of the top and keep going higher, because on the high time frames, market has a bearish context. All that we would like to get here from this trade, potential trade, I'm not sure that we will get, but we're planning, right? So all that we could get is a possible pullback here, some retracement, somewhere maybe to the 618 resistance area around 1830, 1840 maybe. So this deep retracement, maybe 50% retracement, 1810. So, but overall potential will be around 100 pips. So that's not actually bad. The second stage of our trading plan, we will intend to use this rally to sell into and join with the bearish background that we have on the weekly. So once market will stop fading the existing bullish moment with the deep retracement, we should go out. And then consider taking the short position with a possible deeper ABCD retracement, just because this is how the weekly chart looks like. not only weekly but also monthly chart. If you read the report, you will see also the monthly picture. So that in 2 words what we have. What additional details exist? On the 4 time frame chart, we see that here the same lower body channel stands around the same area, right? So and things that we discussed on Friday. Here we have this ABCD target 1710 that perfectly fits to confidence support area on daily chart. So we simultaneously have the confidence support and agreement. What we're going to do on Monday: first, wait for the market complete this target, watch for what will happen here, touch the confidence support. Second, watching for 2 moments, reversal patterns on the hourly chart, some bullish reversal patterns or something that confirms our suggestion the market intends to react to the upside from this level. Second, by the end of the Monday session, keep an eye on the daily chart, control appearing of the grabber. If we will get grabber by the close, that might be much better. So it will be great confidence for this trade, and it will give us really good potential to get the good result on this. So that's probably all for now. The week is promised to be really interesting, so let's keep watching. See you on Tuesday.